Hi, my name is Ron Briggs. I'm the Senior Vice President of Operations for Carstensz Capital Partners. I'm pleased to announce we've just launched our new website. The URL is www.carstenscapital.com. Again, that's www.carstenscapital.com. Not only does our site have a fresh new look, but we've added a borrower calculator to our homepage. The great thing about this calculator is that it's mobile friendly. So our hope is that our developers will be able to utilize this tool while out in the field analyzing some of your future projects. In just a few minutes, I'll be giving you a tutorial on how the calculator works. But in the meantime, just wanted to highlight a couple of additional tabs on our website. The first being our loan program tab. On this tab, we have included borrower criteria. So these would be items a borrower would need to meet in order to qualify for a loan with Carstensz. We've also added our loan matrix on this tab, which does give you a high-level summary of our loan programs that we offer currently. In addition, we've added some more detail to our investor tab. We have added some team member bios to each team member on our team tab. And we've also updated our Contact Us tab. So if you do have additional questions or need additional information, please feel free to use the Contact Us, and it will send us an email in which we can respond back to you just as soon as possible. So now what I'd like to do is walk you through how the calculator works. So previously I'd mentioned you would first need to navigate to our URL. So again, that URL is www.carstenszcapital.com. And once you've landed on our homepage, you would need to scroll down about a third of the way down the page and you will actually see the borrower calculator. There are really 4 data entry fields that are required in order to get the calculator to provide you with an end result. The first being our property acquisition price. Second would be any wholesale or assignment fee, should one be applicable in the example. Your total rehab cost, and your projected ARV, which is your after repaired value. So we are going to just make some assumptions and walk you through an example. So for our acquisition price, we're going to use $400,000. For our wholesale assignment fee, we're going to use $25,000. If there were no assignment fee in your particular transaction, you would still need to enter a 0 in order for the calculator to function properly. But again, in this example, we'll use $25,000. We're going to estimate our rehab cost at $150,000, and our projected ARV we're going to estimate at $800,000. Now you'll notice the estimated time for project. This is the 5th data element. However, I do have it defaulted to 6 months. However, that can be changed, but for this particular example, we're going to keep it at 6 months. And if you continue to scroll down, you will see 2 circles here which give you some results. The first being your LARV percentage. This is your loan to after repaired value. And currently this one sits at 75.6%. And the cash needed for closing, I do want to stipulate this is not necessarily the cash that you would be required to bring to the table that would be shown on a HUD-1. This is additional cash you would be required to deposit with the title company in order to reduce your simple LARV percentage down to our acceptable threshold. We are currently lending at 70%, and that's how I'm completing the underwriting. So in this case, in order to bring that LARV percentage down to 70%, it would require an additional down payment, if you will, of $44,750. Now, if you wanted to get this example down to 0 required for an additional down payment, then we need to be able to reduce our simple LARV percentage. So we would scroll back up and try to determine which variable that we would be able to change in order to make that happen. You may know in this example or your particular project that the seller will not accept anything less than $400,000. Maybe the assignment fee or the wholesaler fee potentially could be negotiated. In this example, we're going to assume that it cannot. And you know that the ARV after repairs will sell around the 800,000 mark. So we want to leave that alone at this particular point. So really, the only variable that you're able to change in this example would be your rehab cost. So what I'm going to do is I'm going to drop it to 104,000. And we're going to scroll back down, and now you see your simple LARV percentage is at 69.8. And because that is at 70% or below, it requires no additional down payment from the borrower because you've met our threshold for the simple LARV. Now, if you continue with this same example and scroll down to the second page of the borrower summary, this will give you more of a detailed look at your total investment, but it will also give you an estimated gross profit. So it brings down your acquisition price from above, your wholesaler assignment fee. We estimate your closing cost at 7%. It may not be that high with your particular jurisdiction or county in which you're located. However, we did want to be on the safe side, so we are estimating 7% of your acquisition price. And these would be closing costs that would be rolled into your loan. The rehab cost we have at 104,000. It then calculates the interest reserve because our loans do require a 6-month prepaid interest reserve to be set up, and this will be rolled into your loan as well. And it also calculates your final origination points, which would be 3, 4, or 5%, depending upon the loan amount, as well as our loan fees, which would be processing, underwriting, and our doc prep fee. So in this particular example, your total investment is $614,925.83. We have our projected ARV from above at 800,000. And we estimate your sale cost when you exit the project at 7%. Again, you may not be paying 7%. We wanted to be on the conservative side for our illustrative purpose calculator. So we estimated 6% commission and 1% in closing costs. As far as your carry cost, I've estimated this at $25 a day multiplied times the estimated time for your project, which in this example was 6 months or 180 days. So 180 days at $25 a day gives you the $4,500 estimated carry cost. With that in mind, after your sale of 800,000 minus your costs, minus your total investment, it's estimating that your gross profit would be approximately $124,574 and some change. I do want to stipulate this is just an estimate. We do have our disclaimer at the bottom that this calculator really is for informational and illustrative purposes only. It is not intended as investment advice. It's not intended as loan approval, pre-approval, or a loan commitment. Again, all these examples are hypothetical and the accuracy is not guaranteed and will change once you go through final underwriting for your particular package and your particular project. So I hope this tutorial has been helpful and meaningful, and I hope this tool is something that you can use going forward to analyze some of your future projects. Again, Carstensz Capital is here. We are lending. We do want to be your lending partner. So please, everybody take care and happy investing. Thanks again for tuning in, and more to come.